By now, everyone is familiar with exit strategies, but you just have to say, in this bull run, everything is a bit different. It's probably not as easy as it used to be, where you could just say, hey, if we cross the purple line on the P-cycle top indicator, then we're overheated and should start thinking about selling. That's how it was in the past. The problem in this cycle, however, is that we're rising in stages. We are basically climbing in steps. Take a look at this. We're moving up in steps with increasingly longer sideways phases, and the P-cycle top indicator is an indicator that's always based on Bitcoin's average price. That means it's already at utopian price targets these days, $160,000. The problem is, if we now rise to $150,000 over 2 months, the P-cycle top indicator will also go higher. In this cycle, we no longer have that one big overheating, but rather an upward trend that stretches over months, and we climb in steps. As a result, we have higher price targets at the end of the cycle because we've simply repeatedly taken out the selling volume here. The downside is that indicators like the P-cycle top indicator might not work this time. This possibility exists because if we just take a look at the rainbow chart, we were already close to the overheated zone twice, here and here. But what happened in those moments? The market makers intervened and caused the markets to crash again. They didn't want the market to overheat too quickly or too intensely. Of course, that makes sense. Naturally, they want to make big money here. And they do that the longer they can prolong the bull run. We see the same thing with the premium indicators. We can clearly see that every time we overheat in the short term, the market quickly cools down again so that things don't move too fast here. The market makers deliberately push us down when we enter the overheated zone. Accordingly, we look at other indicators that are definitely more reliable than the P-cycle top indicator. Because with this first indicator, we're already talking directly about liquidity. So let's take a close look at how global liquidity is rising. Because every time it rises, Bitcoin rises as well. Take a look at this. When did the bull run actually start? Right here, exactly at the point when global liquidity was also increasing. That's what triggered the bull run. That's why you should pay full attention to it. When we hit the top in global liquidity here, we also hit the top in Bitcoin. Incredibly important. These are indicators you can always rely on. Because Bitcoin dominance drops when there's an expansion of money, and it continues to rise when we see a shortage of money. That was even the case in the 2021 cycle. But here we saw a shortage. Here we then saw an increase in Bitcoin dominance. So if we now see another increase in global liquidity, we'll see a drop in Bitcoin dominance here. And what's interesting in this cycle is simply that we have less and less time for the drop in Bitcoin dominance. In previous cycles, we sometimes had a 12-month drop in Bitcoin dominance during which the altcoins performed. Then there was a long Bitcoin phase. Here we had 9 months and are currently experiencing an even longer Bitcoin phase. That's why the size of the finance is getting smaller and smaller. This means that it could be that the altcoins really only have a window of 4 months. But the explosion will come as soon as we see a significant expansion of global liquidity here. And above all, this is also related to the Fed balance sheet. An incredibly important indicator. If we see our top here, then you should sell at the latest, because after that, cryptos will completely crash. As a second indicator, we have the Ethereum chart in connection with global liquidity. And I'll show you that here, because here in black we see the Ethereum price, in red we see the global liquidity top, and here in green, the bottom. Every time we enter the overheated zone here, when the price really brushes up against the global liquidity top, that's when you should sell at the latest, because at that point we are definitely in overheated territory. That was the case here, 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 and here. So far, this indicator has worked perfectly. So you should definitely pay attention to this, because it's entirely connected to real liquidity, which ultimately determines the direction this whole thing takes. And as a third indicator, we have the 50-day EMA. It is incredibly important and incredibly meaningful because you have to admit some things have changed, and this indicator has shown everything exactly, especially in the last 5 years. This indicator is a moving average indicator, and when we crossed above it here, we saw our Baldwin top here. The interesting thing is, we crashed here, found support again here, and then continued to rise, reaching a new all-time high. It was only when we fell below it here that we entered the bear market. At the latest, you should have sold here, because if we close 2 candles below the 50 EMA on the weekly chart, you should definitely get rid of everything, since after that, everything drops into the abyss. When we were still at around 45,000 per Bitcoin here, you should have sold, because at that point, the altcoins were still holding up well. Ethereum at $3,300, BNB at almost $500, Cardano at $140. 3, 4, 5 months later, things looked completely different. That's why you definitely could have relied on this. This indicator is very meaningful because we've already tested it 3 times in this cycle and found massive support each time. Every time we've tested it, we've climbed significantly higher afterwards. This indicator is incredibly important. It is extremely meaningful. If we fall below it with 2 candles, then you should definitely sell. As long as that doesn't happen, we're in an uptrend. And finally, we just have to look at the volume divergence. That's an indicator that is incredibly important. This is the OBV-MAVD indicator. And this indicator simply shows us the trend of the volume, and that's why it's so incredibly valuable. Here it was absolutely spot on. When we saw the big correction here, we could already see it down here as well. We saw that the volume was dropping off dramatically. We slid down here, and you could have completely taken advantage of that. This indicator is important because at the double top, everyone thought, okay, now we're heading towards $100,000. But this indicator had already shown the next trend in advance, namely that we were getting less and less volume, and accordingly, the bear market was initiated here. So this indicator is incredibly important because it shows us the trend. Here's how it works. If we see, as in this example, that it turns red, then we should definitely pay close attention, because that could indicate that we are likely to see a correction in the coming weeks. Whenever we move into the red area here, it means that we are hardly getting any new volume, that the volume is decreasing, and that we'll probably see a correction first. And that's why you should definitely remember this indicator. And these are all indicators that definitely have their purpose and make sense. Because, as I said, the peace cycle top indicator is great, but nowadays we simply have a problem. Of course, the market makers know about this. The market makers know that everyone relies on it. That's why you should remember things like this, look at where the liquidity is really flowing, what the liquidity situation actually looks like here, and pay attention to things like that. Things like volume divergence, where you can really clearly see how the trend is structured. And as I said, I don't want to talk down the peace cycle top indicator or the rainbow chart or the Bitcoin power law, but with these average-based indicators, we just have other problems. For example, here we have the problem that in this cycle we've already risen way too quickly, but at the same time we're rising continuously and always have these sideways phases. I mean, just look at the halving here. At the halving we had already broken our all-time high. We've never had anything like that before, not even once. In 2017, things only really took off months after the halving. In this run, we were already rising extremely fast at the time of the halving. You can clearly see that we're rising differently in this cycle. And accordingly, I just want to say that some indicators might not trigger anymore. I still hope that they will trigger, and that's definitely possible, but it could also be that they just don't trigger anymore. But what you can absolutely rely on are these volume indicators. Volume trends stay the same, or global liquidity that doesn't change, and that's why, in my opinion, you should focus more on these things in this cycle. I hope this video has definitely helped you to develop a better exit strategy. And at this point, I hope you enjoyed it so far. Thank you very much for watching, and see you next time, friends. Ciao.